This is the fourth Monetary Policy Committee meeting by the Central Bank of Nigeria this year. Rising from the two-day meeting, the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, reels out the Monetary Policy Committee decisions pertaining to the foreign exchange market. The Apex Bank boss gives commercial banks the marching orders on the sale of FOREX, vowing that they will be monitored closely henceforth.
The Central Bank will henceforth discontinue the sale of foreign exchange to bureau exchange operators. B. The bank will no longer process or issue new licenses for BDC operations in the country. This stoppage extends to all licenses being currently processed regardless of the stage of that processing. The public should note that once a customer provides the basic documentation to purchase foreign exchange, all banks must immediately, either on demand or within a stipulated time frame, sell foreign exchange to the customer. Any customer who does not receive foreign exchange along these lines must report this to their bank, and where they are unsatisfied with the resolution, they are required, indeed they must, contact the CBN on our toll-free line.
Threatening to deal ruthlessly with banks that work with these operators, the CBN governor adds that this move is to safeguard the nation's currency. He also has some words for those he claims are collaborating with the bureau d'echange operators.
We will deal ruthlessly with the Nigerian banks who have acted as collaborators with these illegal forex dealers. We will deal with them ruthlessly because they have allowed their banking and payment system infrastructure to be used to facilitate this illegal dealing in foreign exchange. As for those foreign organizations involved, we will report them to their regulators. We will write to those organizations seeking their understanding and that they must desist. If they seek to operate in Nigeria, they must go through the right channels through which they must procure either foreign exchange or procure naira for their domestic operations.
The decision to stop forex sales to the BDCs, the central bank governor says, will stop the greedy attitudes of these operators who have left their purpose of being retailers and have become illegal dealers.
Staying with the Central Bank Monetary Policy Committee, it also unanimously voted to retain the MPR at 11.5%. The MPC also retained the cash reserve ratio at 27.5% and liquidity ratio at 30%, just as it did in the month of May. Earlier, Mr. Emefiele gave reasons for the decision to leave key rates unchanged, stating that raising it would hinder the recovery of the economy.
The MPC made the decision to hold all parameters constant, believing that a hold stance will enable the continued permeation of current policy measures in supporting the recorded growth recovery and macroeconomic stability. The committee thus decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted to 1. Retain MPR at 11.5%, 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the MPR, 3. Retain the CRR at 27.5%, and 4. Retain the liquidity ratio at 30%.